Hi and welcome to this week's Flash. It's Sunday the 28th. Come on you Irons! And for those of you who are unfamiliar with that chant and you don't know West Ham Football Club. So I am going to outline one long idea, and the stock is Irn Limited, IREN, formerly known as Iris Energy, and this is a Bitcoin mining and AI cloud and infrastructure stock. But the frame of why I'm talking about the stock is equally as important. And remember, all of these ideas I put to you are never standalone trades, because we're portfolio traders here at ITPM. So I want to start by just considering generally the semi and data center trade. And we know these stocks are on fire and they may well continue to go higher. Demand continues to be extremely strong for the build out, and new markets and products are literally opening up in front of our eyes. But I'd like you to have a look at this first chart. This is my own sort of data center index, and there are 24 stocks in it. And they will include the Microsofts, the Metas, the Nvidias, the AMDs, the Microns, as well as the Vertivs, the Vistras, the Credos, the A-Labs, even this Constellation Energy, CCJ, these sort of names, because of course energy is very much part of the data center trade, the Arista networks and the Lumentums. And the list, of course, is not comprehensive. But out of that list is where I choose to trade my expression of the AI hardware build-out trade. And when you look at the chart, shouldn't be a surprise, a monster rally in this sector. And whether you think the market's going to broaden out now, which it may well do, the point is you can still want to be long the data center trade. But the problem is, the higher these things go, then the chances of getting a meaningful return over 200%, which we're aiming for here at ITPM, diminish. And a recent example of this is selling Credo to buy Marvel and IREN. And it's not like I don't like Credo anymore. But as I said, it's rallied so hard, the chances of getting really well paid from here, in my mind, have diminished. So that's the frame. I've swapped Credo for Marvel and a half position in IREN, and it's a really interesting stock, and it's fun to talk about. So let's get to it. IREN, it's a $3 billion company, Bitcoin and AI cloud and infrastructure. And I think IREN's carving out a unique position at the crossroads of sustainable compute infrastructure, and is using low-cost Bitcoin mining revenue to help fund emerging AI cloud services, and it's all powered by clean energy. It's got a really good aggressive expansion plan, and the stock's firing on all cylinders, meaning there is strong sort of execution and financial momentum. And there are three business segments, obviously Bitcoin mining, AI cloud services, and AI infrastructure, cutting-edge data centers. Now, the major revenue generator is still Bitcoin mining. But the stock pick is really about the evolving and fast-growing AI infrastructure business. However, small caveat. If you don't like Bitcoin, if you think it's a load of old rubbish, if you think it's going to zero, this stock is not for you. And personally, I'll never trade MicroStrategy, Mara, or Riot, because I don't want a pure play on crypto. Now, when we look at the Q3 2025 numbers in May, you're going to see, we'll have a quick look at the numbers, really, really strong operational leverage coming through. 2026 shows 73% revenue growth and 450% earnings growth. So it's executing brilliantly across the board, and they're using their cash flows from Bitcoin mining to get into the more interesting stuff. Now, when we think of cloud services, they call this business, or they refer to their capacity as the fleet. And this year, through 24, they went from 816 GPUs to 1900. And this is a collection of NVIDIA H100 and H200 chips. They're very close to full utilization, or on the call they say at or very close. They're customers for renting the compute power or could be AI startups, research labs, or enterprises, and they're renting the GPU power over the cloud. They charge per hour, per job, or reserved blocks. Their customers range from a few hours to 3 years. This is exactly the same business model as Amazon Web Services and Azure, but IREN is specializing in their ultra-high performance GPUs, and their new constructions in plan will be cutting edge. Now, one of the main catalysts is, remember, that's just telling you what it's doing and how it's going now. Where are potential catalysts? Well, when you look at a pricing table, Amazon Web Services charges, and they split it whether it's using H100 or H200. They're £10 to £12 and $1 an hour. Azure is 7 to 10. Google Cloud is 4, and IREN is $2 to $2.50, running at full capacity. So clearly, they could well have pricing power, and this will just lead to a huge operational leverage. Now, the really exciting thing are the longer-term investments that are underway. They've got 2 big projects in Texas. One's called Horizon 1, which is only 50 megawatts of power. And then the big one, the beast, is called Sweetwater in Texas. It's part of a 2 gigawatt hub. They currently have about 660 megawatts operational, either to Bitcoin mine or to rent out for cloud services. This is going to increase to 885 this year, and then over the next 2 years, it will ramp up to 2.9 gigawatts. Think how high the margins are in the cloud business, 95%, with potentially huge operational leverage through pricing power and, of course, currently insatiable demand. Now, a company like this could easily be a bid target, right? The management, who have come from a private infrastructure background, are super aware that they've got to raise money as they go through the build. They've just recently raised 550 million in a convertible. They're very aware of equity dilution. They really want potentially to work with partners, but they want customers online as they go through the process. So I think they're very investor friendly, right? I think they're just changing. They'll be able to raise more money in the States, I think, with a current development. And, you know, data centers is where it's going to be for a while. They're building a lot of scale. And by the way, remember, in 2 years, they're going to have 3 gigawatts for an industry that might need 120 or something like that. So what started out as quite risky and speculative a couple of years ago now looks like it's never enough, never big enough. So what are the risks? Obviously, Bitcoin collapses, their Bitcoin revenue, their hardware profit goes down, the numbers are going to miss. And of course, it's starting to feel a bit memey, this stock. It's rallied from 6 to 13, 14, right? It's had a really big rally through the main numbers as all this hardware sector's rallied on really, really hard. Clearly, if electricity prices go up and Bitcoin price goes down, this trade ain't going to work in our time frame. Obviously, funding risk as well as the normal macro risk. Obviously, there's execution risk in the build-out. Now, in terms of structure, I've gone for a September 17, 21 vertical. You can buy the September 17s for 168, sell the 21s for 93 cents, get 66 contracts, spreads. That'll be your $5,000 net spend. And if the stock's at 21 or higher by the 19th of September, you'll make 433%. So come on, you irons, and remember the frame. My view is that I still want to be overweight the AI data center trades, but I can't just keep buying these stocks as they go higher and higher, where I think my chance of a multi-bagger return are diminishing. Thank you very much. See you next time on The Flash.